Anyway, on to the markets. S&P, it was down about 0.3%. NASDAQ was down 0.38%. Dow fell 204 points. Everybody's waiting to hear what the Fed has to say tomorrow. Are they going to lower interest rates? No, they're not going to. That's the guess on the street. But all the pressure that Trump's putting on him, it's going to come sooner rather than later. And the talks with China, now they're certain, uncertain, this way, that way. We don't know where they're going. That brought the markets down as well.
In today's news headlines, silver price continues to look for a bounce. The silver market continues to see a lot of noise, but on Monday, it looks like we are trying to find a floor in the market as we have sold off so drastically. The market has been very bullish until recently, so this pullback is healthy. The silver market has gone back and forth during the trading session here in early Monday trading, but what I would point out is that the market is trying to find its floor. We plunged on Friday, but since then have had a trade deal between the United States and the European Union, which, while firming the US dollar, which is typically negative for silver. The $37.50 level underneath current trading is a major support level that I think will continue to be respected. So I'm definitely going to be watching that. On the other hand, though, we may not even drop that far and we may look to the upside. The upside is, of course, going to be paying close attention to the $40 level that we tried so hard to get to but failed. The $40 level, of course, is a large, round, psychologically significant figure that a lot of people will think of as a good headline. If we can get above the $40 level, then I think you've got a potentially explosive move to the upside. But I don't think that's going to be easy to do. It's not a huge surprise right now to see the market going back and forth because we have rallied so strongly since the bottom in April. Of course, this is typical behavior, especially considering that we are in the middle of the summer and volume could be a bit of an issue at times as well. But either way, I like the idea of buying dips. This is a bullish market. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
You're going to wait till Tuesday to hear what Trump has to say. It is important. Whirlpool missed second quarter analyst estimate and slashed its dividend. UPS fell more than 10%. Whirlpool tumbled 13%. Yeah. You know why? Because you got to read your Trends Journal. And you look at some of the trends on the economic front. Global orders, durable good orders fell sharply in June. Well, now we're going into July. So the durable good orders went way up. When there was the COVID war, everybody was locked down, they were buying this stuff. Now it's over. And the markets that are going up are low-paying areas, retail, food, like restaurants, but they're not going up that high. And we have our economic update, and we notice that. We notify, we go here that corporate earnings in the U.S. for the most part have been coming stronger than anticipated. And despite feeling the economic pain, retail sales are relatively strong, new job creation is moderately strong, and job losses are not terribly down. But according to data from Legal Shield, while Wall Street is strong, the average Americans, or we call them the plantation workers of Slavelandia, whose debt levels rising and financial stress hitting COVID war highs of 5 years ago, happy days are not here again. All right? Financial stress and rising debt levels are levels that it was when the COVID war began. And as reported, Kitco reported this, Legal Shield, a legal service company that provides Americans with access to legal advice, counsel, protection, and representation, said the second quarter consumer legal index increased by 4.4%, driven by surging foreclosure and consumer finance legal inquiries, also rooted in increased debt. Foreclosure index jumped 13.3% during the quarter and is now it's almost 30% higher than a year ago. Another flag, consumer finance inquiries have surged 8.7%, and we go on. So the rich are getting richer, everybody else is getting poorer. Where are the markets going to go?
Fidelity says $4,000 gold possible as Fed cuts, dollar drops. Gold could hit $4,000 an ounce by the end of next year as the Federal Reserve cuts rates to cushion the U.S. economy. The dollar drops and central banks keep adding holdings, according to Fidelity International. Multi-asset fund manager Ian Sampson said the firm remained bullish on the precious metal, with some cross-asset portfolios recently increasing holdings as prices eased from an all-time high above $3,500 an ounce in April. The rationale for that was that we saw a clearer path to a more dovish Federal Reserve, Sampson said in an interview, adding that some funds had as much as doubled their 5% allocation over the past year. Also, August is often slightly weaker for markets, so more diversification makes sense, he said. Gold is up by more than a quarter this year as uncertainty around President Donald Trump's aggressive attempts to reshape global trade, conflicts in the Middle East and Ukraine, and central bank accumulation buttressed gains. Still, the metal has traded within a tight range over the past few months, with demand for havens cooling a little as some progress in U.S. trade talks eased fears about worst-case scenarios for the global economy. Fidelity's bullish outlook for gold is similar to that from Goldman Sachs Group, Inc., which has made the case in recent quarters for an eventual rally to as much as $4,000 an ounce. Still, others are cautious, including Citigroup, Inc., which forecasts weaker prices. Spot bullion was last near $3,315. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
Hey, you like me? I'm gonna let you pay 125 hours, all right? All right? Hey, man, how about a little jiving like that? No, I can dance like this. I'm too fat to boogie. Hey, I'm elected now, right? All right, I'm elected. Hey. That war's gonna end before I get inaugurated, all right? All right? This guy Leighton says an interest rate cut is not going to be a silver bullet that fixes things today for the average American. But we forecast it's going to be a silver bullet when Trump lowers interest rates for the equity markets. Again, let's go back to 2018 when Trump was president. What happened? The Dow had its worst December since the Great Depression. What happened? Trump pushed Powell to lower interest rates. The equity markets went up 22% the next year. And as I keep saying, the lower interest rates go, the deeper the dollar falls. Now the dollar, by the way, has gone up. You know, it was like at about 100, 18, 19 euros, and now it's down to like 115. because of the tariff deal that Trump cut with the EU, or is cutting with them. But going back, the lower the interest rates go, the deeper the dollar falls and the higher gold prices go. So when you go to your Trends Journal and you read the economic update, before Trump pushed Powell to lower interest rates, you ready? Gold was selling at $1,200 per ounce. Isn't that something? We're going back now to 2018, December. Gold was selling at $1,200 an ounce. And as Trends Journal subscribers well know, I've been bullish on gold for a lot of years. So now what are we looking at? Gold today is it's about $3,225 an ounce. And again, it's still near that, hanging in that range. It was way up. It's down $175 from its high. But think about it. Back in December of 2012, gold was selling at around $1,200 an ounce. Now it's almost $3,500 an ounce, and now it's at $3,225. Anyway, going on. After Powell lowered interest rates in January 2019, gold prices shot up to $1,539 per ounce that year. Yep. Okay. So as we go to press again, gold is at $3,325 an ounce. The lower interest rates go, the higher gold prices are going to go. Oil jumped up nearly 4% today. You know why? Because Trump ramped up pressure on Russia over its war in Ukraine. And he said that you're going to impose oil tariffs and other measures on Russia, quote, 10 days from today. Okay, everybody, remember, 10 days from today. And you know, he always keeps changing it. Let's see if he changes it this time.
What do you think of Celente's take? Is he spot on? Do you agree with him? Post in the comments section down below your honest opinion and share with the stackers if you have an exit plan to sell your gold and silver, or if, on the contrary, you won't sell your stack no matter what. Subscribe if you have not yet done so. And check this video right here because it's a perfect fit for you. I'll see you on the other side.